Eddie.
All right. Good morning, everybody. It's a beautiful day. Thanks for joining us. My name's Bonnie Nault. I'm the 2021 president of the Eastern Connecticut Association Realtors, and I now call this meeting to order. I'm so happy to see you all here today. I'd like to start by thanking you all for renewing your membership with ECAR and welcome you to our February membership meeting. We have a really full program with 3 topics to address this morning. And as Susie said, if you have any questions or issues about the contact, put them in the chat and we'll answer them. And if not, we'll answer them at the end. Our first guest is Greg Antipoff, our resident CPA, who will update us on taxes and stimulus programs. Then attorney Yona Gregory will update us on the latest in tenant landlord issues, of which there are many. And we'll end with Andrea Barton Reeves, CEO of the Connecticut Paid Leave Authority, who will clarify what realtors need to know about the new Family Leave Act that went into effect this year. Before we begin, Susie said, turn off your cell phones. And would Melody Edelman please come up for the invocation and the salute to the flag?
Good morning. I have a fun, lighthearted poem to share with everybody this morning. February is a time for warm hearts, to welcome peace and set apart a portion of our business space. I'm thankful for this virtual place where we can meet and gather here. I'm thankful for my realtor peers. What would I do without the association, since right now there is no vacation, rest, or relaxation? Today, let's focus on what we know and be thankful for what we learn and how we grow. Let's be safe and wear a mask today so we can say we're here to stay. I did not write that, our author unknown.
All right. Do we have a flag, Susie?
We do. Bonnie, go ahead and do the flag, so the salute.
All right. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you so much, Melody. That was a great poem. Please help me give a warm welcome to our newest members here today, Amy Arsenal and Tara Crossley. If we missed any other brand new members who joined within the last month, please wave to be recognized. And we congratulate all of you for joining our association. Community Outreach has already started their fundraising for our community benefit raffle. Today, you can try to win a basket of love put together and donated by Chelsea Licatis of Navy Federal and Melody Edelman of William Ravis. The basket is valued at $200 and tickets are only $5 each. Susie, do you have the basket up?
Yep, I've got it on share. You should be able to see it, Melody or Chelsea. If you guys want to describe what's in there, that would be great.
Yes, there's a $50 Visa gift card, some champagne and some champagne flutes, and all kinds of candles and Valentine's cooking items, a warm, fuzzy Valentine's pink blanket, and a beautiful basket. It's really lovely. There's a lot of fun things in there.
Awesome. I'm not going to do the chat right now because but I'll take 10 tickets.
Catherine. Yeah, you can put your, if you want to donate, you can put it in the chat.
Okay.
And Catherine's keeping an eye on who wants tickets.
Okay, perfect. So put your number down and the drawing will be held at the end of the program and you must be present to win. Next, I'd like to introduce and extend our sincere thanks to today's sponsors. I encourage our realtor members to please get to know all our affiliates and give them an opportunity to do business with you. First are our diamond sponsors, Green Home Solutions with Dustin Maurice. Do you have a couple, we have 30 seconds for you?
Yes, I just want to say hello. Dustin with Green Home Solutions, where your mold, indoor air quality, and disinfection affiliate members. And this month for realtors, we're going to start back up with any free disinfection. So if your office needs a disinfection or you guys had a COVID scare, give us a call and we'll come out at no charge and disinfect so we can keep you guys selling homes and not getting sick, and figure out how to get people to sell their homes. Connecticut is too nice. That's the problem, I guess. So thanks for everybody, and we'll talk soon.
Thank you so much. Next is the law office of Chris Albanese. Is Chris here?
Chris is here. Good morning, everyone.
Good morning.
Say thank you to everybody for just following our COVID guidelines. We have a lot of people coming in the office, and we're very, very strict about it. And we want to keep people safe, and to everybody out there, stay safe and stay safe.
Thank you so much. Prime Lending with David Johnston.
Morning, everybody. David Johnston, Prime Lending. Good to see all your faces. I just want to say thank you for your business in 2020. And Randy and I, things are again busy this year. But one of the things that we're seeing is that a lot of buyers are getting frustrated because of the multiple offer situations and kind of leaving the market. I want to give you an alternative. If you can, if they're qualified for say 250, instead of looking at 250, drop it down $50,000, $75,000. Look for a property that might need a little bit of work in an area that they're looking for, and we can do a renovation loan. It opens them up to a whole new group of inventory that you might not be in a multiple offer situation on, and you might make your clients really happy. So think about that, and everybody please stay healthy, and we'll talk soon. Bye-bye.
Fantastic. Sound Home Inspections with Tom Morgan. Is Tom here?
We can swing back around, Bonnie.
Okay. Platinum sponsors are Chelsea Groton Bank.
Good morning, everybody. It's Matt. Like we mentioned at the top of the game, it's all about inventory. I was reading a Hartford blog this morning, something that I follow, and they basically got zero inventory in the 0 to 500,000 range. So we feel your pain. I would encourage everybody to talk to your database of folks who might be ready for their move-up home and remind them again how low. Maybe they want to see the numbers. They'll decide to list their house, move into their next home. And CHFA just dropped down to 2.5%. So those first home buyers can get real money. So hopefully we can move the bell curve here and move it. Stay safe. Great to see everybody.
Thank you so much. Gateway Mortgage Services. Anybody hear from there? How about Homestead Funding Corporation?
Hi, everybody. Keith Turner, Homestead Funding. Just as previously mentioned, yes, CHFA did lower their interest rate, and if you haven't realized, they're allowing you to roll those closing costs into that down payment assistance loan again. So you don't necessarily have to negotiate to get the seller to cover closing costs, because in this competitive market, we know how impactful that can be. Also, one thing to think about is not just doing the pre-qualification, but getting those buyers pre-approved, effectively almost a cash buyer at that point, other than the appraisal. One thing we've really vamped up on our end is doing that. So we've had clients just this past week that they ended up getting the offer purely because they had a pre-approval and not a pre-qual, which is what the other buyers had. And it took us about 4 days. So normally pre-approvals took a little bit longer to kind of move through. But we get all the meat and potatoes, that heavy lifting done beforehand, so that your buyers are the ones that get the house. So any questions, feel free to give me a call, Keith Turner, Homestead Funding, and be safe out there. Thanks.
Thanks so much, Keith. Liberty Bank. Anybody here? Peck and Teneski by John Peck. No. Skips Wastewater Management. Sunrise Home Inspection. Nobody here? Tiger and Building Inspections represented by Sue Fasciani.
Hi, Bonnie. Thank you so much. Yes, Sue Fasciani with Tiger Home and Building Inspections. I'm marketing manager with Tiger Group. Thank you so much for doing this meeting via Zoom. It's great. You know, I'm gonna play off of Dave. He's mentioning about the 203K program. It is a wonderful program, and I want to point out that we do have two 203K HUD specialists that can do those inspections. So keep us in mind for that, as well as we have increased our staff. So we have more inspectors now. So I know that the deals are going fast, and you know, we can get that inspection scheduled for you very quickly. So just give our office a call. We're working 7 days a week, and you know, we're open till 8 o'clock at night, have online scheduling. So make it very easy for your clients to schedule. And lastly, I just want to point out, we have a $25 coupon online. So if you want to help your buyers out, you can pass that on or register them, and it will be automatically emailed to them. Thank you so much.
Thanks so much, Sue.
You're
Our
welcome.
gold sponsors, first is Commission Express. Anybody here? Or Sava Insurance. Well, for those who weren't here, I appreciate your support. As you know from our installation last month, one of the objectives for eCar is to purchase a headquarters this year. With that in mind, I'd like to just give you a real brief financial snapshot of the association. Given the pandemic and necessary changes we made to keep our members and safe staff, we considerably saved some expenses last year. As of January 31st, our total liabilities and equity stand at 1.75 million. We're on target for a 5th straight year of membership growth, with pre-licensing classes consistently filling up. By moving our headquarters to a more permanent yet central location, we will be able to lower our expenses even further, enabling us to freeze local dues while continuing to offer you great products, services, and tools for many years to come. I'll keep you posted as the year unfolds. And if anyone hears about a suitable space for our office, please let Susie or I know. Next, our Government Affairs Committee Chair, Matt Lissy, is going to present the legislative issues before Connecticut, before CTR this year. We do have our very own Carol Christensen, CTR president, here with us to chime in if there's anything to add. And there is a lot on the agenda, so go ahead and hit it, Matt.
Thanks, Bonnie. And Carol, cut me off at any time if you want to chime in. I'll be quick. There are a few issues that CTR is working on and some things that they're drafting as well. The Omnibus Housing Bill, CTR has drafted this legislation to increase the housing opportunities and expand the potential for the creation of generational wealth in Connecticut. The bill includes limited deed restrictions and enhanced recognition on non-deed restricted affordable units, establishing a baseline for accessory dwelling units, addressing zoning commission voting, limiting how municipalities may tax properties during the construction phase, increasing fines for unlicensed real estate practice, and providing expungement of criminal records of certain crimes. CTR has asked the Insurance and Real Estate Committee to raise legislation improving broker professionalism by expanding the requirements for a broker's license. CTR is part of a working group headed by the Secretary of State's office, codifying the successful executive order related to the use of remote notary in real estate transactions. Of course, CTR supports the first-time homebuyer savings accounts, House Bill 5027. CTR also supports dam disclosure, Senate Bill 700. We support the removal of taxes that discourage owning a primary home in Connecticut or a business in Connecticut, which include estate, gift, and mansion taxes. CTR opposes the following concepts and bills. Obviously, any new or expanded tax on real estate, including but not limited to statewide property tax or assessment, expanded seller conveyance tax, new buyer's conveyance tax. CTR opposes open space conveyance tax, which comes through nearly every session, and CTR continues to oppose this as well. We do not support any kind of transfer expenses that add to the cost of the purchases of the property. We oppose mandates at the time of real estate transfer, which include any new mandatory tests, inspections, or transfer fees. And last, we oppose any energy scoring on either homes or commercial buildings.
Thank you so much, Matt. Now you know why our calls to action and RPAC, Realtor Political Action Committee, are so important. If you haven't done so, please text CTR to 52886 to sign up for those messages. And if you text ECAR to 69922, you'll receive all the alerts from ECAR about events like this. Info like that is on our website as well, and don't hesitate to call the board if you need it. That again is CTR 52886 and ECAR is 69922. Really appreciate if all our members would sign up. Please consider making your RPAC investment for 2021 sooner rather than later. We have a very high support by major investors in our board, but we'd like to extend our entire membership to get involved. So now it's time to bring up our first guest. I want to say ahead of time, I do have another state meeting that I'll be taking off for early. So I appreciate all of you being here if I'm not here at the end. Our first guest is ECAR affiliate member, Greg Antipoff. He's a CPA, and thank you, Greg.
Good morning. Thank you for having me. Susie, is it possible for me to share my screen? I do have some slides that might be easy. I believe it's disabled.
I just made you a co-host, Greg.
Okay, perfect. All right, so let me go ahead and do that share. All right, is everybody able to see, you're able to see my screen?
Yep.
Okay, perfect. All right, so so much to cover, so little time. I'm going to try to stay out of the weeds and give you guys as much value as we can here. This says 2021 tax update, but this stuff, just like year 2020, is changing literally as we speak. Maybe not as we speak right now because there happens to be a trial going on in the Senate, but in between that, there are changes rapidly happening. So without further ado, some of the things that we're going to touch on today. Again, I'm going to try to stay high level. I will stick around if time is available during my slot and there's Q&A, or at the end if there's Q&A. I'll be more than happy to dig a little deeper, answer any questions we have. I'm going to talk about some of the 2020 stimulus, as well as some of the tax changes that are affecting our community, some changes for 2021, and then some bigger topics. There's a payroll protection program, which is back open for round 1, and there's a new round 2 that we'll discuss. And then something that just came out this week, clarification for self-employed, and that's the paid sick and family leave credits that are available that I think may benefit some of you in a big way, and then some other resources in any Q&A. So one thing that we experienced last year was called economic impact payments. This is what I sort of call mailbox money. These were payments that just kind of showed up in people's mailboxes or bank accounts if you met certain criteria. So this came out as a stimulus. This wasn't specific to realtors. This is any U.S. citizen, taxpayer, tax filer. The first round was in April of last year. It was $1,200 per individual. If you were married, you should have gotten $2,400, and then $500 per child. Now, if you didn't see those payments, it could be for a couple of reasons. You could have been over the income thresholds. So if you're an individual, you made more than $100,000, or a married couple over $200,000, you didn't see those payments. Another way another reason you may have not seen those payments is if you hadn't filed your 2018 or 2019 tax return, because they were using those particular tax returns to determine if you met those income criteria. And if you did, and they had your bank account information on file, they would have direct deposited those payments to you. And if not, some people lost these honestly because they mailed out these prepaid debit cards that looked like junk mail in all honesty. So some people threw them away, not realizing that it was actually a prepaid debit card for that payment. All right, so that's last year. Now there's a round two that came out, signed into law December 27th of last year. You should have seen those in January of this year. A little bit more of a reduced payment, $600 per individual, $1,200 if you're married, and $600 per child. Had the same income limits as round one. However, the criteria was a little bit different. You must have filed your 2019 tax return. They did not look at 2018 tax return for this. So you had to have filed your tax return in order to get that payment. Now, all is not lost. These payments were actually, the economic impact payments were actually a prepayment of what's called the recovery rebate credit. So if you did not get those payments and you qualify for them, when you file your tax return for 2020, there's actually a true up process, and you'll actually get those in the form of a refund or credit on your 2020 tax return. Now, in the instance where you made more money in 2020, which was the case for not all, but a lot of the real estate community, there is no take back. So if they overpaid you in round one or round two, you get to keep that money. But it bears the question of when do we file our 2020 return? And here's why. Round three of this stimulus is actively being discussed. The Democrats proposed a bill earlier this week as part of the process they're moving forward with another round of $1,400 payments, and that's $1,400 per individual, including children. So a family of four, you're looking at $5,600 if you meet the criteria. But those criteria are unclear right now. So the reason that I say pay attention to this is for our clients during round one, we looked at whether or not we should hurry up and file 2019 tax returns or wait, depending on if their income was above or below that $150,000 threshold for 2018 or 19. So we actively made the decision of whether to file a tax return so we could take advantage of those stimulus. The same is going to hold true for this tax season. You're going to want to be in communication with your tax preparer, because it's most likely that the income limits for this is going to be reduced. So if your income happened to be less in 2019 than what it's going to be in 2020, you may want to wait. So in the case of a family of four, you get the $5,600, and then once that once you get those payments, you go ahead and file your return. So just something you want to be in communication with your tax preparer on this. They should be having this conversation with you about when is appropriate to file, or at least giving you the option, having that conversation. Now, on this slide, I want to bring your attention, actually, forgive me, this slide actually isn't updated in terms of the standard deductions. Ignore these 2018 or 19 numbers. They are true for 2018 and 19, but they should have been updated for 20 and 21. So forgive me there. But the detail I added to this slide is that even if you file and take the standard deduction, which a lot of people are now, because the standard deduction is much higher now than it has been historically. And just real quick, I don't want to go too deep on this, but the difference between itemized and standard is standard deduction, everybody gets it, you qualify for it. Or you can take the greater of the itemized deduction. So this is where we take things like property taxes, mortgage interest that we pay, gifts to charity. And if those exceed, in this example, if a married couple, if those exceed 24,000 or so, you would take the itemized deduction. The reason most people aren't taking the itemized deduction anymore is twofold. One is the standard deduction is nearly doubled what it was in the past. And two, we now have a limit on those taxes that we can deduct at $10,000. And that's part of the things when we talk about advocacy in Connecticut and other places, we're trying to fight to get those limits restored. So most people are taking the standard deduction. Why is this important for 2020 only? If you made cash donations in 2020 even if you don't itemize, you can still deduct up to $300 of those. The reason they did this is because there's a lot of people wanting to give to charity last year due to the unfortunate scenario with COVID, and they want people to be able to help out and have a tax deduction. I say cash, that's cash or check, it's just not goods. So if you donated food to something or clothing, that doesn't apply here, but if you did make any sort of cash contributions, up to $300 on your tax return, you can deduct for 2020 only. Okay, meals and entertainment. Quick refresh from years past, entertainment is gone. We can no longer deduct entertainment. Good news though, is for the year 2021 and 2022, meals are now 100% deductible. That's up from being only 50% deductible. This was something that President Trump specifically fought hard for because he knew restaurants were impacted more so than a lot of other industries, and they wanted to encourage businesses to bring their business back to restaurants to help stimulate them. And by doing that, they've given us 2 years of being able to, for businesses, to get 100% deduction on meals. Now, to clarify, that doesn't mean 100% of your meals are deductible. It still has to be a valid business meal, but when you do go there, whatever you spend, you get a full deduction for it. It's not limited by 50%. Okay, biggest topic, PPP, and I'm sorry, Susie, how much time do we have? 5 minutes, 10 minutes? You're muted, but if you just want to give me a 5 or 10, I'll keep talking. And
I want to say about 10 minutes.
10 minutes, perfect. Okay, so payroll protection program, all right, originally intended to help employers out by keeping their employees on payroll. Okay, well, you say, Greg, how does that help me as a realtor? I am not an employee. I don't have employees. Well, as a self-employed individual, you also qualify for this. There was a first round that was in the beginning of last year through the middle of last year that a lot of folks took advantage of. That program had closed. That program, the first program, what they're calling the first draw, is back open again. So if you were somebody who did not take advantage of that originally, it's back open. So as a self-employed individual, again, I'm going to stay high level here. I can get into the details later, but basically, if you take your income for the year as a self-employed individual, and you divide that by 12 to get your average monthly income and multiply that by 2.5 times, it's 2.5 times your average monthly income. It was a loan that you could get from your local bank, 100% backed by the SBA. If you used it for the right purposes, that loan was 100% forgiven. So we call it a loan, but it's really not. If you use it for the right things, it's forgiven. So that was round one. That is back open again. This program and the next one I'm going to talk about are open until March 31st of this year. Okay, there's now a new round two. Whatever amount you qualified for the first round, you can qualify again for the second round. The only additional criteria is you have to have been down 25% in revenue in any quarter of 2020 versus that same quarter in 2019. So for most realtors, this is going to be quarter two. It's a bit funny. We've been doing a lot of these applications and the reason I say it's funny is because this is the rule. You have to be down 25%. Almost all of my realtors were down 25%. However, if we look at all of 2020 versus 2019, most of them were up significantly for the year 2020 over 2019, but that's not part of the criteria. You just need to have been down 25% in one quarter. So a lot of people will feel uncomfortable taking advantage of this program because they say, well, my income was double what it was in 2019, although in Q2, we did pretty much nothing. So it is something you qualify for. Again, same criteria as the first draw, and it's 2.5 times your average monthly payroll. So if this is something, if you're interested in doing, talk to your bank, talk to your accountant if you need help with the figures, because what you're going to need here is you are going to have to be able to quantify your revenue by quarter. For our clients where we're doing their books every month, it was a very easy report we can run to see what quarter over quarter was. If you don't do that and you don't keep good track of what you do, what I've been suggesting is go back to your broker and ask for a commission statement for 2020 and 2019, transactions by date, and then you can sort of chunk each of those and compare them to the quarter over the other one, over the prior quarter. So that's that. Again, here is where strategy comes into place. You need to be talking to your tax advisor here. If you have the option of using your 2019 income here or your 2020 income. Now, for purposes of the 25% reduction, we have to compare a quarter in 2020 versus 2019. But when it comes time to calculate what our average monthly payroll is, okay, chances are your income was a lot bigger in 2020. So you may want to use your 2020 tax return to calculate what your average monthly payroll is. So this is again where we have to make a decision. Are we filing early on our 2020 income return for certain reasons to take advantage of the economic impact payments? Are we doing it to take advantage of payroll protection program? Or are we delaying filing so that we can take advantage of the payroll protection program or the other programs? So these are conversations you need to have. This has been the most dynamic year in terms of value of a tax preparer. Historically, you guys have heard me say this. A tax preparer, when it comes time to prepare your tax return, I'm really providing zero value. I'm doing something that has to be done. I'm documenting history, what's happened in the past. It all, all the planning comes throughout the year. But this year, there's actually planning and strategy that can come in determining how we file and when we file. So it's more important this year to really have those conversations with your tax preparer. So expanded in the payroll protection program, historically, you could only use it on payroll, rent, in utilities. They've expanded what you can use this money for. So it's been able to be taken advantage by a lot more people. So you still have to use it on payroll, at least 60%, but you can now use it for operational expenditures, property damage, supplier costs, and worker protection. Worker protection, this is things like purchasing masks, plexiglass shields. If you run a brokerage and you've had to make these modifications to your office, operational expenditures and supplier costs are pretty broad. So up to interpretation there. But as a realtor, if you don't, the 100% of yours will be eaten up through the payroll. So you really don't need to worry about these other categories. And they did throw property damage in there. This was more a result of businesses. We really didn't feel this in Connecticut, luckily, but businesses that were damaged due to civil unrest in certain communities where there was rioting and businesses were damaged, they kind of lumped that in here so those businesses could use this money to help restore that damage. Okay. This final one, I'm going to be very high level because the calculations are very specific to the individual and everybody's circumstances are very different here. But there's what's called paid sick and family leave credits. Again, this was primarily designed for employers and required actually by employers, where there's a set of criteria where workers were generally not able to work in 2020 for things like having to quarantine or their kids being out of school. And if you met certain criteria, your employer is required to pay you up to certain thresholds in terms of dollar amounts and for a certain number of days if you met some of these criteria. Now, I'm putting this up here not to get into the calculations, but to let you know if any of these apply to you, you need to be having a conversation with a professional on this. This specifically, I don't think you want to take on your own because there's a lot of if-then criteria and overlap between if you have some of these existing. But basically, if you were forced to quarantine for any reason because you had COVID, if you had to quarantine because you may have possibly been exposed, if you were feeling symptoms, if you had to care for a child because their daycare or school was closed, that would be a criteria. And in order to meet these, if you weren't able to work, meaning at all, meaning telecommuting either, which telecommuting is the definition they use, the term. However, I mean, most of us worked from home last year, but if you happen to be experiencing symptoms or you were not able to work at all, any particular days, you qualify for this. And it's pretty substantial because it's actually replacing what your income would have been for that particular day or number of days where you weren't able to work. And in some cases, that limit is limited to $200 a day. In others, it's limited at over $500 a day. So depending on the reason you weren't able to work, again, there are certain buckets these fall into. This is definitely something that, and so my point here is this just came out this week that this also applies to self-employed folks. And there's a form, I don't have the form on here, but it's a form 7202 specifically for self-employed that walks you through all the calculations with this. So if you were somebody who had definitely had COVID or had to care for a child, those are the two most common scenarios. You definitely want to look into this because there's some pretty big money to be had there. And these are credits that would go against your self-employment tax that you pay as part of your income tax. Be more than happy to get into the weeds a little bit on that if we have time for Q&A. And just a couple big resources from NAR that they provide for you. If you go to these addresses, nar.realtor/coronavirus or tax reform, there's great resources in terms of realtor specific strategies around everything that's going on here. So those are great places to check out. And I will leave it at that for right now.
Thank you so much, Greg. That was a really informative update. Next up, we have Yona Gregory, our affiliate attorney, who is going to talk to us about all the issues going on in the state.
Good morning, everyone. Okay, so I don't have any slides, and my presentation is a little more depressing because it's about evictions and where we are with that federally and statewide. So I'm going to talk about evictions, and I'm going to talk about it mostly from a landlord point of view, because most of you represent landlords and you want to know when can my client possibly start an eviction, that kind of thing. But a lot of you probably have friends who are maybe in positions where they are tenants and they need to know, what are my rights as a tenant? You know, what do I do? How do I take advantage of these extensions and that kind of thing? So I'm going to focus at both sides. We have two current moratoriums running simultaneously right now. One is federal, which is the CDC moratorium, and then the other is a state moratorium, where that is Governor Lamont's emergency orders. So each one is different. The federal moratorium, the CDC moratorium right now has been extended through March 31st. What that means is that if you are a landlord and your tenant is in there and they want to take advantage of the CDC moratorium, the tenant actually has to give you something in order to be included in the moratorium. So if you have a friend who says, I can't be evicted, there's a moratorium, you know, there's a halt on evictions, you have to tell them it's not automatic. You need to send the landlord the CDC declaration, which then includes you in the moratorium. So if you have a client who's a landlord and says, look, I want to evict somebody, they can start an eviction, but the minute the person gives them the CDC declarations, that would halt the eviction. If they don't provide the CDC declaration, the federal CDC moratorium does not apply. So again, you know, in order to be included in it, the person has to be proactive. They have to complete a document called the CDC declaration. So what's going on now is that we're filing evictions, we're sending notice to quits, but the state, the Lamont has us automatically sending the CDC declarations along with the notice to quit. So in other words, if we send an eviction for something that we can do in Connecticut, serious non-payment, along with it, Governor Lamont's emergency orders require us to send them the CDC declaration paperwork. In other words, here's your eviction notice, you are going to be evicted. However, if you complete this form, then this halts the process. So most of the people are actually obviously filling out the form because they're like, okay, I'm being evicted, and there's a form attached to it in both Spanish and English. All they have to do is sign it, and then that becomes included in the CDC moratorium. And then we have to halt everything until March 31st. My dog is in here snoring. It's great, great stuff. So outside of that, if they don't proceed and they don't fill out the CDC form, then we can just keep going with the eviction. However, to further complicate things, we've got the state moratorium. So the federal moratoriums, the CDC requires you to fill out the declaration. The state moratorium right now, the governor has extended it through April 19th. So it was February 9th. By the way, it's been extended like every month for, you know, extended. So we've started out not even starting evictions or taking files in at this point because we don't want to start them and then have to keep forwarding everything. So right now it's April 19th. I mean, I'm hoping that's the end of it. but there are exclusions for Connecticut. So if you have a landlord who says, how do I evict someone? There's certain exceptions where we can proceed with an eviction. So let's say the person hasn't received rent in 6 months. That would be an eviction that we can proceed with. However, we send the notice to quit for serious non-payment, and everything has to be done really specific right now. And it's constantly changing. So definitely send them to like some lawyer, anybody who knows what they're doing, because if they do it themselves, they're not going to do it right. We've even obviously done them wrong, you know, because it's changing every day. So the state says you can do it. You can send a non-payment notice to quit if they owe you 6 months or more since March. So we send the non-payment notice to quit along with the CDC declarations to the tenant. And now if they send us back the CDC declaration signed, that's the end of it. We can't proceed until the federal moratorium is over, which would be March 31st as of now. If they don't send anything back, then we just keep going forward with the eviction. What's been happening is we're going forward with the eviction, we file it in court, and then someone in court tells these people, hey, you got to fill out this form, it's going to stop everything, or their friend tells them that. So then they go to court, they file the CDC declaration at that point. But what we're doing, and we're having some success with it from the landlord's point of view, is some of these CDC applications or declarations, they're supposed to be a signed affidavit that alleges certain things. You know, I make under a certain amount of money. I've been specifically affected by COVID financially. I've been trying to pay my rent. I've been trying to get services. There's some declaration that they're supposed to sign under oath, swearing under oath that these things are true. And a lot of the time when we do an eviction, our landlord will be like, look, we know that's not true because A, B, and C. So we've been filing with court and asking for a hearing where we can question the person on the veracity really of their statement, whether it's true or not, and say, look, we don't think the CDC declaration applies because they're lying, they're perjuring themselves. And we've been successful with that. So, you know, if you have the other side of it, if you have a friend who's a tenant who says, I'm going to fill this out, and you know they're not being truthful, you can let them know, number one, there's fines for being, for perjuring yourself on this declaration. I haven't seen anyone get fined, but I know a lot of lawyers who are wanting to pursue that. So if they don't fill it out, and if they're not truthful, if they're just trying to use it to circumvent and to be included in the moratorium, then that's not going to work. So it would halt the process, and it would halt it until the federal CDC moratorium is over, which right now is March 31st. I'm inclined to think it's going to be extended beyond that, but right now it's March 31st. So the other reason why you can start an eviction in Connecticut, so you have 6 months non-payment since March, that would be called serious non-payment. So your client says, look, I haven't been paid in 4 months. What can I do? Nothing. I haven't paid in 5 months. What can I do? Nothing. 6 months since March. Okay, we can proceed in Connecticut for serious non-payment. Another reason that they could proceed with an eviction right now is if they are a client of yours and they are wanting to move into their property. So say you have a client who owns a single family home, and they're like, look, we rented this temporarily with the intention of coming back to the property. We were relocated for work or something like that, but we need to come back and we need to move back into our home. And these temporary renters will not leave. In that instance, yes, we can start and proceed with an eviction. And again, they could file, you know, for the CDC, and that would stop everything. But it would be something where a lawyer maybe could argue that it doesn't apply. So they can proceed in that manner. However, you know, we've gotten a lot of clients of ours, landlords, you know, they're wise to this stuff and they're reading all the exceptions and they're like, oh my gosh, I'm going to pick one. I'm going to like fit myself into that. So I've got, you know, guys that are calling here that own 300 apartment units, and they're like, I want to evict someone because I'm moving into the unit. Where do you live? You know, now, well, I live in Florida with my family. Okay, well, that's not believable. If we file a bunch of evictions based on a false, you know, saying I'm a landlord, I'm bona fide, I'm going to move into this property, I swear I'm moving in, and we know that we're filing it in a way to just circumvent the moratorium to try to get the eviction to pass through. First of all, my office isn't going to look good with the court because we're going to be filing a lot of these, and the court's going to become wise to it. So we're not recommending, unless it's, you know, really valid, unless you're a landlord and you can really prove that you're absolutely intending to move into the property, then you're not going to be able to just say, hey, I'm moving in without any questions asked. So in other words, you know, that's got to be a real thing. The other reason why you can evict people right now is a serious nuisance. So serious nuisance is, again, one of the things that my clients are calling me saying, you know, I want to do an eviction on serious nuisance. So everybody's idea of serious nuisance is a lot different, you know, and there's a statutory serious nuisance for evictions. So the statutory serious nuisance for evictions is different than what you or I might think of a serious nuisance. Like, for example, when I go home every day and there's like stuff on the countertops, you know, that my husband leaves there, I feel like that's a serious nuisance and he should be evicted. But as far as, you know, statute goes, that would not qualify. Serious nuisance per eviction statute is basically threatening bodily harm, purposely destroying the property, accidentally breaking a door, that wouldn't be it. Kicking through a door and having evidence of someone kicking through a door, yes, that would be it. Getting arrested for drugs off the property, probably not going to work. Getting arrested for, you know, a small amount of pot on the property, probably not going to work. Getting arrested for a drug factory inside the property, that probably will work. Keeping in mind, though, if the person's case gets dismissed in criminal court, then your eviction may not work for serious nuisance because now they've been, you know, innocent after, you know, a trial. So those are the kinds of things that are serious nuisance, and they're really, you know, it's tough because each situation is different. So we have had, you know, probably hundreds, if not 1,000 prospective landlords calling us in the past year since this happened with different ideas of serious nuisance. You know, I want to evict my tenant for serious nuisance. What we hear a lot of is they've got dogs. They're not supposed to have dogs. The dogs are disrupting the peace. The dogs are, you know, making mess in the hallway and doing all those other things. And it's not really serious nuisance unless the dog maybe bites someone. So each situation is different, and we try to deter people from starting an eviction that we don't think is going to work, because we don't want to take someone's money to do it. Specifically, we're super busy anyway, and like we don't want to take any extra money for a case that's going to fail. And we also don't want the client to waste a bunch of time and, you know, fuel this tenant who's already not cooperative by starting a case and letting the tenant win the case. That's never a good thing philosophically, either for, you know, psychologically rather, for the tenant or for the landlord. So we're really careful with the serious nuisance that we proceed with, because we want to make sure that it's something that's going to likely work. And the same thing with the bona fide intention of the landlord moving into the property. So just to recap, the state moratorium gives us certain exclusions: serious non-payment, serious nuisance, wanting to move into the property. Lapse of time is not one of them. People have called here and said, you know, look, I want to evict my tenant. Their lease is expired. That is not an exclusion. So you've got to keep them in there as long as the state moratorium is in effect, which is now April 19th. So, you know, it's a really difficult situation for everybody. And it's hard because these laws are being written off the cuff, and they're not being written by people who do housing generally. So you've got, you know, legislatures writing housing law. They've probably never even read or practiced housing law. They don't even know how it works. So we're kind of just flying by the seat of our pants here with some of these new rules and regulations that are going on, which is why every eviction has to be done just right. Every time the order comes out from the governor, he changes what needs to go in the notice to quit. So each notice to quit now has to comply with whatever emergency order is in effect, and it has to say certain things, otherwise it gets thrown out of court. So you know, it has to be done specifically, and you have to keep in mind that if you violate the federal moratorium and you proceed with an eviction in violation after they give you the declaration, you could be fined up to $100,000 per activity, which I haven't heard of anyone being fined, but I've certainly gotten threatened by tenants who I've been proceeding against, you know, saying they're going to fine me. I haven't yet, but our position is, look, we don't believe that it's true, your declaration, until we question you in court. So we're going to proceed. But as a landlord or as a private person, I don't recommend anybody proceed with anything. Once you've been given the CDC declaration, do nothing else, because you don't want to run the risk of getting some sort of fine or penalty. So that is kind of like the nutshell of the CDC federal moratorium and the state moratorium. The frustrating part, of course, is you've got people right now in properties who are obviously taking advantage of these moratoriums. They haven't paid rent in a long, long time. We've got people who are girlfriends and boyfriends living in properties where they broke up like a year ago and the boyfriend can't get them out. There's restraining orders. You know, we've got people in really truthfully dangerous situations right now because of these moratoriums, because a lot of times the moratorium is not just preventing people who are legitimately affected by COVID. For instance, the state moratorium is very restrictive in the fact that you can't evict someone for a lapse of time. So instead of it just being specific, the state moratorium saying, hey, if someone's affected by COVID, you can't do anything. That I understand, but to have people, you know, kind of stuck with tenants that are not really a tenant, squatters that can't be evicted right now, who never had a single rental agreement to live there, they fall under the moratorium because they're not serious nuisance and they're not serious non-payment. They were never supposed to pay rent. So there's a lot of people who are under the umbrella right now of the moratorium who really shouldn't be. And those people are, you know, in properties where your clients may own that property. You may have sold them this, you know, investment property 5 years ago, and the person's so frustrated now. Oh my God, I've lost, you know, a year of rent. Oh my God, these squatters are in there. So it's a really bad situation for some of you guys as clients that you deal with, as well as, of course, ours. And the flip side is, the good part of it is, you know, certain people are protected. So that is those two things. And then there's one other caveat that's so confusing. That's the CARES Act. So there's another federal act called the CARES Act. It's capital CARES. And what that is a federal protection against people who are living in properties that were like a federally backed loan. So if you have a client who had got a HUD loan, a CHAFA loan, an FHA loan, a VA loan, and then had a duplex and rented out one side of the duplex, they fall under the CARES Act. And as the CARES Act provides is the notice to quit has to give at least 30 days. So what happens is a lot of these evictions have gotten started and they're not in compliance with the 30 days notice to quit. And at the very end of the eviction, we have to file a CARES Act affidavit where the person has to say whether their property is a, you know, federally backed loan. And if they say, yes, it is, we have to restart the entire eviction that could have been 6 months ago right now. So that's another kind of a caveat that's really tricky right now, because a lot of people frankly don't know whether their loan is federally backed. Like, you know, they're like, what does that even mean? They have no idea. They think federal. I've had people call me and say, isn't all banking federally insured? Because, you know, how it says the FDA. So like people just don't even understand. So it's a tough kind of a situation. Our office has been handling it by sending out a questionnaire prior to starting any eviction. And we're constantly adding, you know, questions into it. Is your property federally backed? This is what it means. So before we start an eviction, we know all the information, you know, in a way to try to prevent us from wasting time and starting the eviction and having it fail. Not to say everything's perfect, because some of these things come in the middle of it. Some things aren't known, but that's the way we're trying to do it. So there's so much that goes into right now, researching whether you can start an eviction, researching how you can do it, what needs to be on the notice to quit, whether you're in compliance of the CARES Act. There's just so many caveats to it that we definitely recommend you tell people, at least talk to someone who does housing. Don't tell them to call me for free, please, though, because I've been on the phone for probably the last 6 months for free, like half my days, and I'm to my wit's end with it, because it's difficult as a, you know, a private practitioner to want to answer everyone's questions and try to help and guide them through it, but also not be on the phone half my day for free, so my staff isn't getting paid. So, you know, it's a tough thing. What we've been doing in our office is telling people we can do like a 15-minute consultation for like $70 or something like that. Give them the basic information and then go from there. That said, you know, a lot of these people, I tell them all the things that I'm telling you right now. I had a client call me yesterday. He wasn't actually a client. He's somebody I gave free advice to 5 months ago. I told him, you can't start your eviction. You have no grounds to start your eviction. I'm sorry, you're gonna have to wait until the end of the moratorium. So he calls me yesterday and says that he has a eviction that he started and it got dismissed because he had no grounds to start it. So he went through like a 4-month process, started an eviction despite the fact that I told him he had no reason to. It got dismissed, and then he wants me to restart it, even though the judge has now closely looked at his case and closely understood that, you know, there's no way that he can do it. Whereas if I had done it, maybe I could have finagled it. But anyway, needless to say, that's a perfect example of me giving out free advice and then it's taken to another level and it kind of backfires for the other person. So the the whole thing about it is it's very, very specific right now. And there's so many people who are legitimately angry with what's going on. There's landlords who are very, very frustrated. I have a client who, you know, was trying to evict someone for serious nuisance. They kept filing extensions that got granted. And over this past weekend, someone overdosed right in the house, you know, after all these extensions were granted. And it's just one of these situations where these tenants should have been out, you know, 6 months ago. But what's going on is just unheard of what's in housing court. The good thing about housing court right now is that they are open. So housing court was physically closed for 6 entire months. During that time, all the evictions that had been started and were pending in the court were just completely stopped. So all of those evictions that had been accumulating over that time had to be processed, and we're kind of at the point right now where they've dealt with all the backlog that they had, and they're moving things forward. Each case in each court, well, each court rather operates very different. New London and Norwich, where you guys probably have most of your business, actually is a better court for landlords to practice in, because our judge is pretty landlord friendly, and he's pretty like to the point and just does things, versus other courts where nothing is moving and the court clerks are putting things down and everything's processing pretty quickly. So in our district, it's a pretty good place to be as far as a landlord goes. So I had a couple of questions that came in, mostly about fair housing. I don't know if anyone has any specific questions about fair housing, but Susie, someone sent a question over, and I did inquire of the fair housing attorney that I work with, and it was relative to the application process. I know that you guys take in rental applications, and fair housing is a really, really tricky area. And I'm really supposed to be talking about evictions right now, but I had an eviction last week where the fair housing attorneys actually filed an appearance on the eviction because they got involved. So fair housing is really scary as realtors, because there are realtors who have been fined under fair housing. And it's one of those areas that a lot of people don't intentionally do anything wrong and there's no malice behind it, but they get caught up on these fair housing rules. And it's really just a despicable kind of a situation for realtors, because you guys are of every good intention and you're not trying to discriminate against anyone. And then these, you know, people come after you like a witch hunt, and you get fined $50,000 for saying that the apartment was too small for a family of 5 or something like that. So with fair housing, that's a whole different thing. But I would say, generally speaking, what I always tell people is do not veer in any way or manner from whatever you say to people each time. When people call to look at apartments, just, you know, you can come look at it. Do you take Section 8? Absolutely. You know, just be very, don't get hyper involved with it and in screening or anything like that over the phone. Just show the apartments. They have a lot of people who do call actively and try to trick you up. I'm a landlord myself, which is why I'm a landlord attorney. And I have about 30 units, and I run them on, you know, Facebook Marketplace, which a lot of you folks are probably experiencing now, doing as landlords or as realtors. And you get a lot of responses that I feel could be, you know, kind of screening efforts by fair housing. You'll see someone will say, do you take, you know, those pets, whatever they are, the emotional support pets and all that stuff. I always answer affirmative. You know, do you take Section 8? Yes, of course we take Section 8. Do you take this other program? Yes, of course we do. We take, you know, just do not offer any information. You know, I have to check with my landlord, or I'm not quite sure. Yeah. Just yes, because there's no point in you vetting people to that degree where you're going to put yourself in the line of fire with fair housing, because you're never going to win a fair housing case. What happens is once they file it, you end up paying fines, because it's kind of like a blackmail kind of situation where they get you. They really do. So I've had clients who have done nothing wrong, paid $20,000 for absolutely no reason. So you definitely don't want to get mixed up with that. So I just recommend, as far as realtors go, that when you get inquiries, you just kind of like be, you know, yes, come see the apartment, you know, fill out an application. That's it. If they ask you, you know, what are specifically our qualifications, just, you know, I'd have to have you fill out the application. I can let you know what, you know, what it is, and just be very open to people applying. And of course, and I think you guys all know this by now, but I still get asked as a landlord. A lot of people ask me, how, you know, what kind of area is it? Is it a safe area? I get a lot of, I do a lot of short-term rentals. So I get a lot of people who are asking that for, like, you know, my daughter's coming in on an internship. Is this a safe area? And you guys know, I think you can never say anything about what type of area it is. You know, it's a safe area, it's not a safe area. You can always just say to them, you're welcome to go on the town and look at the, you know, statistics and demographics. You're welcome to call the police department and do your research, but I cannot tell you anything about the area, you know, whether it's good for kids, whether it's safe or anything. You just need to check it out yourself. So that's something that I do see a lot of people still asking and answering, and they can trick you up on that as well. So does anyone have any specific questions, just because I went over so much and it's so confusing what's happening in evictions right now, and people sometimes have specific.
Yona, I have a quick question back to the moratorium on the exceptions there. So if you own a condo, let's say, and the market is really great, it's a great time to sell, but you have a tenant, is that an exception if you want to put it on the market?
So no, in some states it is, but it's not an exception in Connecticut. The governor, the way he's written the rule is that if you have an intention of as a landlord of moving into the property, and you actually have to tell, you know, the court when the lease is up. So if you have someone who is living in a condo and they have a lease that is not up, you can't even say you want to move into the property. It can only be if their lease is month to month, and then you can move into the property. But as far as needing to list it for sale, that's actually not a reason that's specifically outlined in the governor's order. I wouldn't be hesitant to try to do it, you know, as an attorney, and tell the person, hey, look, let's try it, see if it works, because some judges may see that as valid, but so far right now, that's not one of the specific exclusions.
And thank you. And the other question is I believe it was the HEROES Act with the new administration. I don't know if it's in effect or being talked about, but the landlords can request the assistance, the stimulus money directly now, or
some of the programs, they will allow the landlord to make application and to request the stimulus money. It's always been that the stimulus money goes directly to the landlord. It's just been incumbent upon the tenant to apply for the stimulus money. And believe it or not, we have so many tenants who just like, I'm not applying for anything, I'm not doing it. They're just completely belligerent, which is just not great. So
but the landlord can now apply?
Yes, some of the programs they can apply. So what I always recommend is do the 211. If anyone wants to find out about the programs, do 211, and they will tell you what the programs are that are available right then, because a lot of these programs change daily. They run out of money, they refund other places. And there's a lot of local organizations who, believe it or not, are trying to dump money. Like they're looking for people to help out and assist. The problem with a lot of these programs, the THIRP, which is a program that allows tenants to get $4,000 of back rent owed. The problem with that program is that it requires the landlord to sign an agreement to keep the people in for a certain amount of time. And a lot of times the math just doesn't work. If the person owes way over $4,000 and the landlord is now going to be saddled with them for another 3 months, the $4,000 doesn't offset the amount of time. So I have a lot of landlords who are actually refusing those programs because the programs are not actually helping them, being that the requirement, they have to keep them there. So that's kind of a caveat to a lot of the programs. And once somebody applies for the THRAP, if the landlord accepts it, that does halt the eviction. If the landlord rejects it and says, hey, look, I'm not doing this, you can still proceed with an eviction. Nobody's forcing you to get to take that money if it's something that doesn't work for you as a landlord. So that's something to keep in mind too. But there is supposedly going to be a lot more money dumped into programs, and that's great, because if this were to work properly, then yeah, there would be a halt on eviction, but also there's programs that are coming in and that are paying the rent on behalf of these people, so they never have to be evicted. Because what we're trying to avoid here is an avalanche of, whenever this thing stops, everybody's getting evicted, and that's what's going to happen unless they can get programs into effect that are paying the arrearage. It's inevitable, you know, it's just not going to, you know, we're going to keep continuing the inevitable of the entire, you know, everybody being evicted. So I think there are programs. I do see a lot of my clients getting more and more funding, but again, it's limited. It's mostly tenant is required to at least participate in some manner. So yeah, there's programs. But what I tell people, my clients, I'm like, look, instead of calling me and just like screaming and yelling and whining all day, which not to sound mean, but that's what's going on. You know, get online, try to research, try to get your, get these applications to your tenants, go there every day and say, fill this out, do whatever you can do to get this money, because it's the way that, it's the only thing that's going to help you right now is to secure some sort of money to pay the arrearage, because if the tenant's not proactive, then hey, you may need to be. So you're not going to get anywhere with just, complaining about the situation. We all get it. It's horrible for a lot of landlords, but sometimes you got to be like, okay, look, this is what I'm going to do. And this is my plan. It's not the plan that you thought you were going to do as far as collecting rent, but it may be the only option.
Thanks, Yona. And I understand that there are $400 billion of outstanding rent payments, and in Connecticut alone, 75 million. So your information is much needed. Thank you so much. Thanks so much. And any questions can go into the chat. Back to you, Bonnie.
Thank you, Yona, so much. It's obvious we have wonderful affiliates that are here to service in it. Like Yona pointed out, let's hire them, not call them for free. Greg and Yona, and take advantage of their expertise, because not only do we have clients, but lots of you, I know lots of you, our members are landlords as well. So thank you so much for that. And finally, we have Maria Miranda from Miranda Creative, who is going to introduce Andrea Barton Reeves, the CEO of Connecticut Paid Leave Authority, to inform our members on the new FMLA requirements. And I am apologizing for having to go to a state meeting, but I will watch what you have to say, Maria and Andrea, afterwards. So thank you so much for being here, and all of you have a great day.
Thank you, Bonnie.
Good morning, everyone. I can't see everyone on the call. Susie, is Andrea here with us yet? Is she logged in yet?
I don't actually see her, so let me check into that.
Sure. So while we're waiting to connect with Andrea, who was invited to join us just about 10:10, so she could be running a few minutes late. So good morning, everyone. For those that don't know me, my name is Maria Miranda, and I'm principal of a 33-year brand management company here in Eastern Connecticut called Miranda Creative. I'm friends with many of you on social media, and you are my heroes. You probably already know that. I've been a longstanding advocate and supporter of realtors, and this past year has brought that to a new level for me. What you are working on, there's been very few aspects of my life that have not been touched by realtors and my friends in my community. I'm very impressed by your passion and your commitment. In many ways, you are the first face and the first smile that people see when they come to the area, and your center of influence is very strong. In a few moments, I'm going to be introducing you to my friend and client, Andrea Barton Reeves. She is the CEO of the Connecticut Paid Leave Authority. Andrea has been running her operation very much like a startup. It's a lean and efficient team. They're responsible for setting up all the systems for supporting the Paid Family Medical Leave Act, including the employer registration process that has begun and the withholding process that began in January. Over the past 30 days, we've had about 70,000 Connecticut businesses registered, and we learned a great deal about the areas of sectors that might need additional clarity or where there might be some additional support needed. Andrea has been dedicated to making herself accessible to employers in Connecticut business sectors through conversations such as this. And she'll be attending and visiting meetings such as this, answering any questions directly or providing any insights. I'm not sure, is Andrea on the call here yet, Susie?
No, but Amber Forrest.
Maria.
Oh, Amber, hello. All right, so I hear her beautiful voice on the call. So without further delay, I'm very honored to introduce you to my friend and the CEO of the Connecticut Paid Leave Authority, Andrea Barton Reeves. Andrea, my friend here at ECAR.
Thank you, Maria. I appreciate the opportunity. I am, let's see. Sorry, my phone just started ringing. Timing is terrible. Good morning.
Probably Jessica.
It is Jessica calling to tell me what? It's time for me to be here?
Yep.
But I'm here. Okay, but I'm here already. Thank you. So as Maria said, I'm Andrea Barton Reeves. I am the CEO of the Connecticut Paid Leave Authority. It is my pleasure to be here today to speak with all of you about the Paid Leave Act. I understand from Jessica and Susie that you have some questions about how The act applies to independent contractors and sole proprietors, so I am prepared to answer those questions for you today. Susie, I'd asked for an opportunity to share my screen so I could walk through a brief presentation, and I'm hoping I can do that, which I think will answer a lot of the questions that you have. So let me start there. All right, let me start from the beginning. Okay, Susie, can you see my screen?
Yep.
All right, terrific. Let me do one more thing. Okay. All right. So I'll just go ahead and get started. So as Maria mentioned, thank you, Maria, for making this opportunity possible. I'm Andrea Barton Reeves. I am the first CEO of the Paid Leave Authority. Before I came to the Paid Leave Authority, I was the CEO at HARC in Hartford that supports people with intellectual disabilities. And prior to that, I spent 10 years supporting children who were involved in child protection and delinquency matters. I have an undergraduate degree from Rutgers University. I'm from New Jersey, and I've lived in Connecticut for the last 25 years. And I have a law degree from New York Law School. So let's just get started and get a clear understanding of which employers are required to participate in the paid leave program. So those employers that are covered are those that have one or more people working in the state, and that does include nonprofit employers and private sector employers with a unionized workforce. If you are a sole proprietor or you are self-employed, you may opt into the program, but if you do so, you have to remain in the program for 3 years by statute. Those employers that are not covered include the federal government, the state of Connecticut, except some covered public employees, and I'll define that in a moment, municipalities, unless they too have covered public employees, and the same is true for local or regional boards of education, unless they also have covered public employees. The only category of employer that is completely exempt are non-public elementary or secondary schools, also known as private or independent schools, and that is because they have never participated in family and medical leave, and they are not participating in this program by statute. So what is a covered public employee? They are all of the non-unionized employees of the state of Connecticut. They are the unionized employees who collectively bargain to participate in the program. With respect to both municipalities and local regional boards of education, if the unions in either of those workplaces decide to participate in the program through collective bargaining, then every person that works in the municipality and every person that works in the local or regional board of education will be included in the program, whether they are in the bargaining unit or not. And you can see there is a pretty expansive definition of municipality, which includes those areas that we normally think of as towns and cities and boroughs, all the way through to tourism districts and flood commissions. Reasons for leave are these, as defined by the statute: to create or expand your family through birth, adoption, or foster care. You can also take leave to care for a family member with a serious health condition or your own serious health condition, which can include being an organ or bone marrow donor or pregnancy. There is special leave available for you to take care of a family member that has been injured on active duty, also known as military caregiver leave, and also to support a family member on active duty is qualifying exigency leave, which allows you to spend time with a family member before they are deployed overseas to active duty. And what is unique to Connecticut's law is that up to 12 days of leave is available for those who are victims of domestic violence, which is also known as family violence leave, under Connecticut's family violence leave law. The length of leave for the paid leave benefits are these. You can take up to 12 weeks in a 12-month period for all of the reasons I just noted, including military caregiver leave. Under federal FMLA and state FMLA starting on 1/1/2022, military caregivers can take up to 26 weeks of leave, but only 12 of those weeks are paid. There are 12 days of the 12 weeks, as I mentioned earlier, that can be used for income replacement for victims of family violence that need to take time off. And up to 2 additional weeks of income replacement is available for incapacity that occurs during a pregnancy. The eligibility requirements for paid leave are these. Give me just a second. Can't get this phone to stop ringing. I think someone's trying to reach me around this presentation, so let me just take a look. Make sure that is not the case. It is not. Okay. So, excuse me. The eligibility requirements for paid leave. You have to have earned at least $2,325 in the highest earning quarter of the last 4 of the 5 quarters. And you can do that through 1 or more employers if you're an employee. You have to have a qualifying reason for leave, and you have to either be currently employed in the state, or you were employed in the 12 weeks immediately prior to the time that you're applying for leave, or if you are a sole proprietor or self-employed individual who's opted into the program, then you can apply for leave at any time as long as you have a qualifying reason and you've earned a 2325 in the highest earning quarter. All right, here are the rules that apply to sole proprietors and independent contractors when it comes to paid leave. Independent contractors are not considered employees as defined by the paid leave law, and therefore do not have to pay into the program. The parties that they contract with and they do work for are not considered their employers, so they do not have to withhold the 0.5% from any independent contractor pay. Independent contractors they're considered sole proprietors under the law, and they do have the option to participate at any time. And if they do so, they have to remain in the program for 3 years. The rules are very similar for sole proprietors. Again, they are not defined as employees under the statute, and therefore they do not have to pay into the program, but they can opt in at any time. And again, the 3-year rule also applies to sole proprietors. But here's the difference. If you are a sole proprietor and you have employees, you as the sole proprietor have the option to participate in the program, but your employees are simply that under the statute, and they have to participate. They cannot opt out. So only if you have people working for you who are independent contractors, then they can make their own decision about whether or not they will be included in the program through their own decision around participation. If you do opt in and you decide that you want to be part of the program, an important thing that you need to know is that when the law changes in 2022, our Connecticut law will have an expansive definition of family, right? That you can take time off for in order to care for that person. Right now, you can only take time off to care for yourself, for a parent, or for a child that's under 18, or if a child that's over 18 that has a disability. When 2022 comes, the law will change to allow you to care for a parent, a spouse, a son or daughter of any age, regardless of whether or not they have a disability, a sibling, a grandparent, or an individual who's related to the employee by blood or affinity, who has such a close association that's equivalent to one of these family relationships. So what does that mean exactly? Related by affinity means this: any person with whom the employee has a significant personal bond that's like a family relationship listed in the statute, regardless of their biological or legal relationship. So the example that I use most, that I think is most accessible, is the second bullet from the bottom, where you may have an unmarried couple that is living together. They do not have legal standing as a married couple, but they may have lived together for quite some time and consider each other the spouse of the other. Right now, if one of them needed to take time to care for the other, they could not do that under the Family Medical Leave Act. When the law changes in 2022, they would in fact be able to take that time off. The same would be true for taking care of foster children. So there will be some significant differences in the definition of family when the time comes. How much do you get? It depends on what you make. If you make less than or equal to the minimum wage multiplied times 40, that's $480. Then you get 95% of your base weekly earnings. If you earn more than that, then the formula is a bit more complex, but no one ever gets more than 60 times the minimum wage at the time, which right now is $12. So that's $720 a week. Here are a couple of examples of how that works. Mike makes $375 a week, which is less than the $480. So his number is 95% of the $375. Deborah makes considerably more, almost twice as much. So she starts at the $480. And then when you apply the formula in the statute, she gets 60% of the difference between the $480 and what she makes. And so her weekly benefit is $612. And I will share these slides so you will be able to have them. I've covered a lot in a very short period of time. You can find everything that I've spoken of at our website, which is ctpaidleave.org. And we are here to help you. You can reach us through the Contact Us portal at the site. We do not have a call center. As Maria mentioned, we are very lean. There are 9 of us that work at the authority, but we do have some support to answer questions that are submitted to us by email. And if you need a call back, you can let us know that, and someone will get back to you. We also have 175 frequently asked questions and videos that are available, and the entire site is available in English and Spanish. So I'll stop now and see if anybody has any questions that I can answer for you.
Seems pretty clear to me. I know there were a bunch of our members that were concerned that they had to opt out.
You do
And,
not have to
you're
opt
saying
out.
independent contractors and sole proprietors can opt in, but they're
Correct.
not
So
in
if you're,
unless they do.
that's right. So there's nothing you need to do if you're not going to participate. You don't have to register and say, I'm not going to participate. You just go ahead with your regular day. If you choose to opt in, then the rules that I outlined are the ones that apply. And that's the way the statute reads right now.
And so maybe there's a large brokerage firm that has a W-2 secretary or front desk person. Did you say that was 1 or more employees or 2 or more?
That's correct. No, it's 1 or more. So if you've got that W-2 person who is, your receptionist or your office manager, and they're your employee, they have to participate. They're considered an employee under the statute. But if you're the sole proprietor or the self-employed individual, you do not, which can be confusing, I understand. But you have the option, employees do not.
And if the independent contractor or sole proprietor does opt in, do they pay quarterly with their taxes? How does that work if they opt in?
That is a great question, because the statute did not contemplate the manner in which, sole proprietors and self-employed individuals receive their income. So we're actually working on providing some guidance on that right now. Essentially, we have to be able to make sure you've earned that 23-25 in that highest earning quarter, and that you've been making your contributions. So I want to answer it by saying that you can pay in as you get paid, but I want to provide some more direct guidance around that. And we're so close to finishing that with the Department of Revenue Services. I don't want to speak prematurely, but I'll have something very soon.
Well, if you or Maria can send that to us and we'll share that with our members, that would be just great.
Absolutely. Happy to do that.
Thank you. Does anyone have any questions for Andrea or Maria for that matter? I know Maria contacted me because she's been hired by the state to help promote FMLA. And the realtors are behind in doing what Maria, I guess if they don't have to, they don't have to do anything. But there was a concern about the community here that we hadn't done our jobs.
Well, no, I wouldn't characterize it that way. Let me say it this way, that we have, as I sit here right now, we have 43,000 businesses that have registered. I know that before the end of this week through the middle of next week, I'm expecting another 27,000 to register. So I will never say that our business community, our employers are not being cooperative. That is just simply not true. And if that's been represented, then I'm here today to say that's not a representation that comes from the Paid Leave Authority. We're incredibly grateful on 2 fronts. That you're still in Connecticut doing business and employing people in this unbelievably challenging environment. So that's the first thing. And I know this because, as you saw, I have a law degree as a lawyer by training. I spent 10 years running my own practice. I know what it's like to run your own business. If I didn't work, I didn't get paid. That was just my reality. So I get it. And I would never denigrate businesses at all, especially sole proprietors or self-employed individuals, because I was one. And second, it's a tough thing to try to keep your business going and then yet meet another mandate that the state has asked you to meet. And we get that. So what we're doing right now is saying, if you have employees, we really want you to register, because the conversation we don't want to have with you later on is your employee comes to us and says, I'm taking leave because I'm getting, you'll know my age by my example, I'm getting knee replacement surgery. Okay, so I'm going to take this. And we say to them, we don't have any record of contributions from you. That's not a conversation we want you to be having with your employees. So if you have employees, that's when you need to register so you can withhold those contributions, make those payments, make sure they're all set to go. You as a sole proprietor, make your own decision. Some have opted in because they've said, when I do the math around buying my own policy and I know I can take time off to not just take care of myself or somebody else, this makes sense for me. And others have said, I kind of want to see how this thing is going to roll out. And others said, I don't need it, because I have a big network of people and it's not worth it to me. everyone's free to make that decision. That's what we're saying. And whenever you come in or not, we're good. If there's any questions we can answer for you in the meantime, as you're contemplating, that's why we're here. I always say it and I mean it, we're here to help. We get it. I get it personally. We're going to try to make it work for you.
That's very great. Thank you so much, Maria. The link that you put out to everybody, is that for these slides that Andrea presented, or is that something different? And can we get the slides that Andrea presented so we have contact information for you?
Yep, I can send you. So Susie, I think I have your email and I'll just send you the slides.
Okay, wonderful.
Okay.
If no one else has any questions for Andrea, then we will conclude that portion of today's program. And
excellent.
Thank you so much.
Thank you. Appreciate the opportunity.
Wonderful. Thank you, everyone. Thank you, Greg. Thank you, Yona. Thank you, Andrea. Would you like to do a Q&A on everything or anything right now, or do you want to get these raffles out of the way first and then we'll have lingering questions? It's up to you guys. Take your mute off if you have any burning questions. All right, if not, we have a door prize of $100 and you must be present to win. And we had 77 people registered. Oh, there is one thing I do want to do, because I think a couple of our annual sponsors did come on the line. Tom Morgan, are you here? Did you want to briefly say hello to everyone? How about John Peck? Did any other sponsors come on that we didn't give you a chance to say hello? Okay, if not, then I'm going to go to this Excel spreadsheet that will do our random drawing, because we had a snow day yesterday and we weren't able to put it in the drum like we usually do. So here is my random drawing, and these are all the people that signed up for the meeting. I'll go down this list. There were 77, and all I have to do here is hit enter and we'll get our winner of the $100 prize drawing. And it is Tom Morgan. Tom, are you on the call right now? Unfortunately, I think he might have got off the call. So we're going to go to the next potential winner. And that is Tara Crossley, our newest member. Are you on the call still, Tara? She might have actually had to leave early, I think she told me. Too bad. All right, good for you guys. Daphne Doran, are you on the call today? All right, we go to the next person. Tina Luft, you are on the call, I believe, right, Tina? Tina, are you there? Speak now, Tina. Okay, next person. Marilyn Lusher just won $100. And then we have one more drawing for a phone ionizer to become germ-free. You put your phone in this little thing overnight and it will clear your phone of germs. The next person for that is Renata Josate. Is she on the call? Okay, next person, Patricia Karen, are you on the call? Next person, Joe Pangelinin, are you on the call? Morag Morris, are you on the call? Rachel Grills Botello. There's a lot of people on today's program that I haven't even met before, which is wonderful. John Peck just won a phone ionizer. John, are you on the call? Sharon Forett. Carrie Tetro.
Yep, I'm here.
Okay, Carrie, you on the phone ionizer. Okay, Catherine, it's time for our drawing. I'm going to give us our view for gallery. Catherine, are you there? Are you ready to do the drawing for the community benefit raffle basket of love? And how much did we collect from today's program?
Stephanie is just finishing up putting names in, and we have collected $345.
Yay, congratulations. That's awesome, everybody. Thank you. All right, Stephanie's going to be a minute, or are we ready to go?
Let me check.
All right. Did anyone have any questions about Greg's presentation, Yona or Andrea, while we have a minute? Greg, that was a lot of good information that you gave, and well, everybody did. Great information today.
I do have a question.
Yeah, who was that, Melody?
No, Laura.
Laura, go ahead, Laura.
And it's for Greg. If you got the EIDL grant, the $1,000 grant, is that taxable?
That is a great question. It is not taxable. And I failed to mention there were a lot of changes that came out of the December 27th law that clarify. So the PPP loan, when you have that forgiven, that is not taxable. Whatever you spent it on is still deductible. And same thing with the EIDL, that $1,000 per employee grant is not taxable. And if you happen to have your application or your loan forgiven last year before that guidance came out, your bank would have retained a balance on that loan of 1,000 or 2,000, however many employees you had. Beginning, I think, sometime in the next couple of weeks, there's a reconciliation process where the SBA is going to refund that money back to the banks. And so your bank should zero out that loan and I believe refund you any interest you would have paid on that $1,000 that was left with the loan.
Speaking of that, on unemployment, is that continuing the COVID unemployment? I don't know if you mentioned too much about the unemployment.
Yeah, so I did not mention the unemployment. Yes, I haven't been keeping up with it. My point is that it is continuing. The dollar amounts have been varying in terms of how much the sort of kicker is in terms of how much the federal government is putting in on top of what the state is doing. The only caveat there is that money, just know if you did take it or you're continuing to take it, that is taxable. If you have the option to have the taxes withheld, I would suggest doing that. That way you don't have this surprise tax bill at the end of the year when you've had a large sum of unemployment money and then you're having to come up with the taxes to be paid on that.
Perfect. Thank you. All right, Stephanie, are you ready to go? Ready to go. All right.
Hey,
drum
Susie, I have
roll.
a question.
Yes. Who was that?
It's Daphne.
Go ahead, Daphne.
With respect to the issues with landlord tenants, if you have a tenant who's being problematic with accessing the unit during a sale transaction, is there any recourse for a landlord? I mean, they're trying to sell the property, but this tenant is being prohibitive about letting inspections go forward and such.
I don't know if Yona is still on. If she is not still on, I will send your question to Yona for a response.
All right, thank you.
You're welcome.
And I just drew a name and it's Bill Cornell.
Bill Correll.
Correll.
Congratulations. All right.
Is he still on?
Bill, are you still on the call? Does that mean we draw again for the basket?
I don't think they have to be present to win.
No, and I am seeing him still in the attendance list. He might have stepped away
Yeah.
from his
Okay.
computer.
Okay.
Yeah, this was a little bit different because people paid for these opportunities. Okay, that concludes our program. I hope you guys all enjoyed today's program. I want to thank Catherine and Stephanie for helping me keep everything tight and organized for all of our events and everything we do. We will be rolling out information about our next membership meeting in the near future. Just to let you guys know, we did push back our award season this year. Normally we would be, the applications would have been out for Realtor of the Year, affiliate, all of that stuff. We've pushed that back in the small hope that maybe we can have an in-person event when the warmer months get going. So stay tuned for information about the awards and the application process and any banquet or event that we may be able to have held outdoors when the weather warms up. So until we meet again, Please continue to heed CTR's showing guidelines and wear your masks. Your health and safety matter to us. And as Bonnie Nolt would say, ECAR can do. Whoop, whoop. Thanks, everybody. Have a great day. Take care.